have some other ones that have come up, and then finding and converting more buyers. So what motivates first-time home buyers? The number one driver of home ownership is family formation. So obviously you have a couple, they get married, they have a baby, all of a sudden it's, we need a yard, we need, a home for our children, we need a good school district, all of those things. Of course, there's a lot of millennials that are not having babies, so they just need a yard for their dogs, and that's cool too. So those are kind of the driving factors behind it. The average age for a woman's first child is 29.6, and the average age for a man is 32. Popularity of growth, or kind of how we gauge how this is happening. We go to Google and we see the search terms, and we see that as of 2019, they were up to 85% search terms for baby registry. This is obviously down from way up from 2012 when it was only 44%. So we know that a lot more people are having babies, especially those quarantine babies. I am one of them who had a quarantine baby, so it's happening. And obviously those are the people that are now looking for homes, and those are going to be our first-time home buyers. The average age today is 33 years old. And in 2006, it was 33 years old. So we have, this is the number of births per year that we're looking at. So they're definitely going up. Who intends to buy in the next 2 years? 58% are millennials, 51% are African Americans, 47% are Hispanics, 38% is the general population. So it's obviously still the American dream. That's what everybody wants. Everyone talks about, we've got to own a home. We're done with renting. It's not for us anymore. And it is still cheaper, even though we see the home prices these days in Central Florida. It is still cheaper to purchase a home in Central Florida than it is, most other places. So that's exciting news too. Where do our renters live? So we know that 42% of them are living in apartments, 34% of them are living in single-family homes, and we know that renters per household, 50% of them are single renters, 25% of them have two, and 25% are two or more. So this is how we kind of identify those opportunities. We know that we've got to target apartments because that's where 42% of our renters are living. And we can also door knock in those single family homes that we know are being rented out. And that's how we can, kind of engage these buyers, these first-time home buyers, into showing them the opportunities for purchasing. So now we have the challenges for first-time home buyers. Down payment is the biggest one, right? Everyone's like, I'd love to buy a house, but I haven't saved enough, or I'm still working on it. And until I, reach my savings goal, I can't purchase. So with that, we have 60% of renters stated that down payment is stopping them from buying. Big myth, 39% of them still believe that 20% is needed for down payment. That is not true at all. We have 3% minimum for a conventional if they qualify, 3.5% on FHA, and the standard conventional is 5%. So there is this big myth that, you have to have full 20% before you can buy, and that's just not true. So we've got to get better at educating our buyers that, that's not the case. So don't wait to save 20% because you don't need it. Credit, 83% of renters cited credit as a concern. Now, we do know that credit is an issue for a lot of our first-time home buyers, but we're going to cover what the credit guidelines are. And believe it or not, there are some people that also still think you need an 800 credit score to buy when you really don't. Affordability, 64% believe that it is cheaper to own than rent, and they are right. It is cheaper to own than rent. Dispelling the myth. DPA is for first-time home buyers only. So you may have someone that says, oh, well, I did own a home. It was a long, long time ago. So since I've already owned a home, I cannot purchase another one using down payment assistance. That is not true. You are considered a first-time home buyer if you have not owned a home in the last 3 years. You don't have to be a first-time home buyer to use down payment assistance. DPA is only for low to moderate incomes. That is true that we do have some programs that are for low to moderate incomes, but we also have another program that sky is the limit. You can be a majillionaire and you can still qualify for the program because they just don't look at, the income max as a hindrance from getting you pre-approved. You can make as much money as you possibly make and you still can qualify for this particular program. DPA has higher rates, so it's better if I saved up for myself. Rates have obviously never been lower, we know that, and that is the case for DPA products as well. So while, someone may think they qualify for a 3.5% interest rate and that's amazing to them, they could still possibly get a down payment assistance at 3.5%. Why use your money when you can use the house money? So that's another myth that we have to go over with them. So rent versus buy. This is a chart. I don't know if you guys can see it as clearly. I can definitely share this with you, individually, but it's just kind of a general buying versus renting in a $240,000 price point, right? So at $240,000, you are looking at a mortgage payment of $1,490. If you're renting, you're probably around $1,680 at this price point. In 5 years, because we all know that that's what rent does, it goes up every year, right? You'll be looking at $2,114 that you're paying in rent. Well, guess what happens to your mortgage? It relatively stays the same. Now, we know that the interest rate is set, so that will not change your principal payment. Sometimes taxes and insurance do go up, but from $1,490 to $2,114 in a 5-year time span, you are not gaining any money. You have no equity. You are not building a savings account. You're not building, equity for your family and your legacy, basically, because that's what the American dream is. So we want you guys to have the ability to continue to have that house and maybe pass it down or sell, cash out and go into the bigger, better home. When you're renting, just don't have that option. Home ownership generates greatest wealth for middle-class families. The net gain to buying a house is $62,728. So I like to share my personal experience with this. I bought a house 4 years ago, lived in it for 3 years. I sold it last year. Within those 3 years, I net, not sold it for and after paying everybody out, I netted $100,000. I'm obviously in Oviedo, so I'm a little bit different, area, did some renovations to the home, things like that. But I tell people that, and it's like in 3 years, I was able to leave that little home and get my big home, that we saved really hard for. Who amasses $100,000 in 3 years' time? It's virtually impossible. The only way you can get there is by home ownership and eventually selling the house, getting the bigger, better house after you cash out your equity. So it's really important that we share stories like that so people understand, hey, it's definitely possible and you're going to make a lot more money when you have the equity and you actually, have your savings plan as your home. Cost of waiting. This is another little slide, so I'm not sure that you guys will be able to see it. Again, I can share it with you individually. But the cost of waiting is basically when you're talking to those buyers that say, hey, we do want to buy, but we're going to give it another couple of years. Well, if you bought today versus if you buy in another couple of years, how much money are you giving up in that equity? If I had waited 3 years to buy the house instead of having bought it, that $100,000 that I was able to make for myself would have gone away, because now the house is obviously a lot more money than it was 3 years ago when I bought it. And that's the whole name of the game, is you want to buy low, sell high, and start building that equity for yourself. There's another just breakdown of the cost of waiting and how much money you're losing out per year that you are waiting. So something like waiting 3 years, you're losing out on a savings of $42,000. So if you would have bought 3 years ago, you would have had $42,000 in equity, and that's what you're giving up. Oh, I think I backtracked here. So these are guidelines post-COVID. They actually have changed again. We do have to update the slide. So let me make this really clear. We were at 640 post-COVID. Prior, we were at 620. We are still at 640 for the Florida Bond Down Payment Assistance Program. However, we do have our own internal down payment assistance program that is called the BOE 100, and that only requires a 620 credit score. It says 660 here. That's not the case any longer. It is 620, and we no longer require those reserves. So if you have a buyer who wants to buy, who gets the down payment gifted to them, sometimes we need them to have a little bit left over in their account so that, you know, they have reserves. With this particular program and with the new changes, no reserves are needed, and they just need a 620 credit score, which is huge. Why door knocking is more important than ever. So we want to find the buyers before Zillow or another lead creates them, right? Because once they go to Zillow, they've got 100 calls coming in. You know, now Zillow's marketing to them to use their own people. So it's actually a lot more beneficial if we're doing the door knocking, we're finding the buyers, we're saying, hey, I understand that you're renting. What if you can own maybe not this property, but one just like it? Let's help you get pre-approved so that you can stop paying the rent and start putting it into your stop paying rent and start putting it into your mortgage and building that equity for yourself and your family savings plan, basically. Finding the sellers. COVID has delayed payments for some who are not back to work yet, and they may not be back to work when forbearance ends. If they cannot afford it, they need to sell it. So that's a big opportunity that we have right now due to COVID is, hey, don't go into foreclosure, don't short sell your home. Let's get you out before it's too late. And so that's how we find those listing opportunities. Once you have the listing, you find the buyer, and you know we're good to go. And obviously we know right now listings are very hard to come by. So this is a quick little door knocking script. I can share it with you guys too individually, but it's, hi, my name is Jennifer. I'm selling the home at 123 Main Street. We cannot choose our family, but I'm giving you the chance to pick your neighbors. Do you have any family or friends that who you would like to live in your neighborhood? So that's a good one for when you have a listing and you need to, you know, create more opportunities for yourself. You just door knock in that neighborhood, letting them know that you are selling a home in the neighborhood. If you want to sell yours too, or if you have any friends or family, who can we talk to that we can get them into 123 Main Street so you actually like who you're living next to? The other one is, I love your home. Is it a 3-bedroom or 4-bedroom? Do you own this home? Yes, you do? Have you ever thought about selling? I have a buyer right now that's looking for a home exactly like this. What would it take for them to buy this home from you now? If no, what's holding you back from buying right now? No matter the outcome of the conversation, hand them a business card and invite them to an open house. So it's just really important to get those conversations going. Obviously, you don't know what you don't know. And once you have that conversation and open up the lines, we can start identifying the needs of our sellers and our buyers. These are the types of loans that are available. These are not all, down payment assistance products. We do have conventional FHA, NBA available for first-time home buyers or down payment assistance buyers. And that's it. I know that that was a lot of information. So what questions do you guys have for me? You can unmute yourself and we can talk.
Hello. Hello.
Hi.
Okay.
Yes.
Hi. I didn't catch the last slide with the types of mortgages that were available. Like one was mentioned was a bond loan.
Yes.
Okay.
I just put it back up here. So
Okay.
the bond loan is, and mind you, now this presentation obviously is talking kind of about a general knowledge of down payment assistance programs. And someone did ask what DPA stands for. It's down payment assistance. So for down payment assistance programs, we have two major programs. One of them is the Florida Bond, which will give you a conventional or FHA or VA option. So you do have three different options available with the Florida Bond. That interest rate is set by Florida Bond, and it's different for conventional FHA and VA. So it's not based on a credit score the way a traditional loan is structured. It is kind of a flat rate depending on if you're doing conventional VA or FHA. The other loan program that we have is the BOE 100. That is our kind of internal program. That one is only offered as an FHA loan. So two different, down payment assistance opportunities. Just kind of depends on where your buyer is at, and obviously that's up to me to have that conversation to determine which direction they'll be going in and which option is best for them.
Okay, thank you.
You're welcome. Anybody else?
I have a question.
Jen? Oh.
Go
Yeah.
ahead. How, let me see, I'm trying to make sure I'm putting the question right. So if someone is like in the process of bankruptcy and they're probably coming to the end of, I think it's like 3 years, I'm assuming. How does down payment assistance work for that person if they're looking to purchase a home?
Got it. So it follows the same rules. They have to not have owned a home for 3 years if they're doing Florida Bond. However, our internal program, which is the BOE 100, does not have that 3-year waiting requirement, but bankruptcy does have their own, we have our own guidelines for following a bankruptcy, and it has to have been discharged for 2 years. So not settled, because there are different dates, but the actual discharge date has to be within 2 years or 2 years later, and then they can qualify for an FHA loan, which is our BOE 100 program, and that would be a great loan option for them.
Okay, thank you very much.
You're welcome.
Do you have a slide with your contact information?
I do. I think it's the last one here. So that is, this is us. So I'm Jennifer. Amy is also in the office. My contact information is there. It's jrosado@boemortgage.com. And my cell phone number is the only way to reach me. I don't have an office line. Again, I'm not in the office presently, like every day, but of course, if we have a client meeting that we need to set up, or a Zoom meeting, phone call, whatever it may be, you just give me a call, and we can get the client details and make sure that we get the clients the help that they need.
Okay, I was unable to see your phone number there. It's so tiny. Can you just give us the number, please?
Yeah, for sure. It's 407-919-9175.
Thank you.
You're welcome. And I will take your information down, and I'll shoot you my business card via text. I'll find your information from our roster.
Thank you.
You're welcome.
Jen, I see that Eva in the chat asked what DPA stands for. Now, I responded back down payment assistance. Is that correct?
Yes, down payment assistance. That is correct.
Awesome. Now, does anyone else have any other questions?
Thank you. Yes, I have a question. To apply for the down payment assistance, do you do that application at the same time that you submit your application for the loan, or this is a separate application?
Great question. It's exactly the same thing. There is no separate application needed for down payment assistance. As long as the buyer meets the credit and income requirements and they're interested in down payment assistance, then that's it. We just offer it to them. The way that I structure the loan on my end is different, but the application that they fill out and the information that they submit to me is exactly the same as it would be for any other loan. And it's also really important to mention that for pre-approvals, I do not specify that the buyer is using a down payment assistance loan. It's not important to the seller. The money works exactly the same way. Closing works exactly the same way. It is a 30-day close. The seller will never feel the difference between the buyer using their own money or the buyer getting money from an assistance program. So I know that's really important for people to know that, because sometimes you don't want to work with a buyer thinking, hey, you know, this buyer is going to use down payment assistance. It's going to make it really hard to find something for them because the seller's not going to like it. Not the case. We don't let the seller know because it's none of their concern, really, and it works exactly the same way as any other loan would.
All right, thank you.
You're welcome. Anybody else?
Yes, I did have another question. At what point will the buyer know which down payment assistance program would be best for them?
Good question. So sometimes it's really apparent and sometimes it's a little more tricky. If your buyer has an income, if your buyer is over the income limit, we know they only have one option available, and that's going to be our BOE 100. So in that case, it's really easy. If you bring me a buyer that's like, I make $85,000 a year, then they only have one option, which is the BOE 100, because there is no income limit for that one. And at that point, we can let them know what their interest rate is and, you know, move forward very easily. For the Florida bond, that is not tricky, but that one is based on household size. So let's say your buyer, the husband, has a salary of $42,000 a year, and the wife has a salary of $40,000 a year. Well, now we're at $82,000. So we just need to check the county that they're buying in to make sure that they're within that income limit. If they're over the income limit, we know we're going BOE 100. And if they're under the income limit for that county, we know we're going Florida bond. Now, Florida bond will give you a set amount of $7,500 and nothing more. So even though they qualify for that one, they may choose the other one, the BOE 100, because that will give you the full 3.5%. So it is different. And you do get more money with the BOE 100 versus the Florida bond. Now, your interest rate is slightly better on the Florida bond, but if you need all of the available money that is out there, then you want to take the BOE 100. And that's where the conversation comes in with the buyer, where we kind of go over their options and they let me know which one they think is best for them.
Okay. What does DOE 100, what does DOE stand for?
So it's actually B like bank,
Okay.
and then, yeah, OE, so Bank of England 100.
Okay.
And it's just, Bank of England 100% financing, meaning they're not bringing anything for down payment and they are financing 100% of the property's value.
Okay, and you said that's up to 3% down payment assistance.
That's actually a full 3.5% because it is an FHA product. So on FHA loans, the down payment is 3.5%, and we will give them the full 3.5% to cover it. So they are bringing nothing extra for their down payment. Of course, closing costs, unfortunately, there is no program that will cover that too. So we do have the closing costs issue, but down payment will be covered.
Okay, thank you.
You're welcome.
I have a question.
Sure.
In which cases is the most people don't qualify for the down payment program?
If they make too much money for the Florida bond, they can't qualify for that one, but we have the BOE 100 available to them. They need a minimum credit score for the BOE 100 of 620. That's the only requirement that we're looking at. So if they have a 620 and they need to borrow the funds, we're good to go. There's no extra hoops to jump through or extra information that we need from them or anything else that they need to check off.
Okay, and how much is that help? We said 7,500.
No, the Florida bond is 7,500, and
Okay.
the BOE 100 is the full 3.5%.
3.5%. All right, that's great.
Yeah, and I have your information, everybody who's on this call, so I will email the difference between both programs. I don't like to get too heavy into it because obviously, you know, once we talk to the buyer and I know their financial situation and their credit scores, then at that point we'll know kind of which direction we're moving in. So just so that you guys don't get too bogged down with the information and trying to figure out which one they're going to go to, that's not really your, you know, area of expertise. So it's not something I want you to worry about, but just know that if you have a buyer who's looking for down payment assistance, we have options. And as long as they have that 620 to 640 minimum score requirement, then we're good to go.
Okay. I had another question. So these are the, I guess, main two down payment assistance programs?
Yes.
Okay.
Yeah. We do have another one that actually just hit the, you know, our market, if you will, last week. And I don't want to cover that one in full detail yet, but again, as long as you have a buyer who expresses that they need down payment assistance money and it's like, hey, I would love to buy a house. We have a little bit saved, but we don't have enough for the full down payment. You say, awesome. I've got someone who you can talk to who has down payment assistance programs available. And then once I determine their income and credit score, I can let them know which one is going to be their best option. And then we just kind of take it from there. Anybody else? Has anyone done a down payment assistance loan before?
No, hi.
No.
Mike.
My name is Mike, and I came like at 1 o'clock, and I came in before the session started. Just as long as you have our contact information, just send your contact information, and then I'll call you if you have any questions and stuff, if you don't mind.
Yeah, for sure. Mike, what's your last name?
Kreiche, Khreiche.
Okay, awesome. Yep, I can email you the information and anything, you know, that we went over so you have it.
Thank you so much.
You're welcome. And so again, so no one in this group has done a down payment assistance loan before, right? Safe to
No.
say? Okay.
I'm getting ready to use one, actually. I'm currently looking and I'm using down payment assistance.
Okay. Who are, do you know which one you're using?
I do not know.
Okay.
Yeah, I do not know.
So again, I feel like there's, I've done a million of them, like down payment assistance. It's not something we want to be like famous for, but have done tons and tons of down payment assistance loans. We're not scared of them. We process them like we do any other loan. They're not, I think some people think that they're scary or they just take a lot more time. I know that there are a lot of lenders out there who will blatantly say, oh, we don't offer them, they don't exist anymore, because they just don't want to deal with it. But it really is the same amount of work, the same amount of documentation that it is for any other loan. And if you have a buyer who's in need, why not offer it?
One other question, I just wanted to clarify. You said the BOE 100 does not have an income cap. Is that correct?
Correct. Yep. So I recently did this loan for an engineer who was making about 120 a year, and unfortunately, he didn't have anything saved. And he was able to use the down payment assistance program. So he got the down payment covered, and then he bid a little bit higher because he could afford it with his income than what the home was valued. And then he just got them to cover the closing costs since he bid over what was valued. And that was like, you know, perfect scenario. I know not all sellers are willing to help with closing costs, but this one just really worked out to be perfect. But yeah, no income cap.
Thank you.
You're welcome. Anybody else? And for anyone who is just coming on, I know that it was supposed to start at 1 o'clock. It wound up starting at 12:30. We just had to make it a little bit earlier. So I'm going to go ahead and put my information in the chat box. If you have any questions that you want to, talk to me offline about, please feel free to do so. And I will also share with you my email address, my phone number, and then if you want to shoot me a text, I can give you my virtual card so that you can, share with any potential buyers that you have. So I'm putting in there right now. And here's my cell phone number.
Jen, you may have to, or I can go ahead and copy paste, but I think you accidentally only sent it to me in the chat.
Oh, I did. You're right. Let me change it. Let me copy it. Okay, everybody can see that now? Awesome. If there's nothing else, we have all your email addresses. Elena will help me coordinate that list, and I will get out to you guys kind of just a quick breakdown of what each program we have available is and kind of the requirements. Again, I just really want to stress you guys don't get too caught up in the which one works for your buyer. Let me handle that, but let's just identify the buyer who has the down payment assistance need so that we can have a conversation and figure out, which one is best for them or, if they qualify at all. So that would be the easiest way to do it.
Okay, thank you so much, Jen, for teaching and everyone who attended today. If you would like to ask any more questions, please feel free to stay on. If you don't have any more, you can hop off, and I hope you guys have a great rest of your day.
Thank you, guys.
Thank you.
You're welcome.
Thank you. Bye.
Bye.
Bye. Thank you. Bye-bye.
Bye.
Thank you.
You're welcome.